Good morning, welcome to the morning update on Friday the 16th of June. I'm Tom Colley and I'll be talking to you about the news and the markets, and as always it's the news where we'll start. Well, we had lots of big news over the last 24 hours or so. The real significance were the Fed on Wednesday night. We had Bank of Japan, the Swiss National Bank, and then the Bank of England, all within a short period of time. All held their current rates, all seemed to be using Brexit as an excuse to delay any sort of decision making. So what we ended up with was no direction further, or no further direction indications at all. We'll go on and look at the markets in a second. What we did see yesterday afternoon was we saw some poor employment claims and poor CPI, although the core CPI was in and around forecast. So nothing very positive for the US dollar there yesterday afternoon. Today, the only items we've got to look forward to are the core CPI from the Canadian dollar and the US building permits. Over in the Far East, this is the Nikkei in Japan. Well, we had a big move down below this level here yesterday. It looked like it was going to be a significant breakout. We'll talk when we look at the other markets. You'll see why this was replicated across the majority of the markets yesterday. So again, as I said, we had a big look down. Looked like there was the potential for a breakout, but into the afternoon we had a very significant pullback. Over on the Shanghai Composite, the Chinese stocks, we've seen a bullish week. But quiet. We seem pretty fixed within this range, fixed being the operative word, bearing in mind that the Chinese government do have a lot more control over this market than equities markets in the rest of the world, or the equity markets we look at. So we're still within that band, so nothing significant to read from that. This is the US dollar JPY, the yen chart. We had a breakout yesterday below this key level at 105.50. We were questioning whether we would see a Bank of Japan intervention at that level. We didn't see it. We're looking at this next level around the 100.70 as being the next potential area where we might see Bank of Japan intervention. This is a weekly chart, by the way, in order so you could see across to this side and you can see what those levels mean. This marketplace did fall away. It didn't pull back nearly as much as the majority of the other markets yesterday, showing that we've still got yen strength in there. Even into the period when we had dollar strength, the yen wasn't giving up ground yesterday very easily. This is the dollar, the US dollar index. This is what we're talking about. We had a big bullish move. We sat at 95. We were testing 95 US dollars for an hour or two yesterday morning. We then broke through. We saw some strength, but we then came to our channel here. And then at that point, we had a complete reversal in the whole market in terms of sentiment. We had a risk, when we look at the S&P shortly, we'll see we had a risk off period yesterday and then a complete change of sentiment into a risk on scenario. Here's the euro and here's the corresponding spike down to our channel. You can see this is clearly very significant because we're seeing this channel on both the euro and the dollar index. I suggest that this is going to be the point that's going to be tested, broken, or reversed by the Brexit vote next week, which seems to have become something that's of worldwide interest of late, having been more confined to the euro area itself, or the European Union area itself previously, but it's been highlighted by all the central banks this week as being of concern to them and why they're acting, or rather not acting, in the way that they are. This is the Swissy. Caught myself out a bit there. The Swissy is one of the other, one of the two majors that didn't quite react, and we have seen some, although we had a move with dollar strength, when we had the pullback, that was a lesser pullback, so there's less strength within the Swissy fighting that back down. That doesn't surprise me because I believe that the Swiss are concerned about, well, I know they're concerned about the value of their currency, but more importantly, they are concerned about that currency increasing in value in the event of a Brexit, and they're seeing money flowing into the Swissy as being a hedge against potential Brexit. Over on the S&P, well, here we can see big risk off, price coming down really hard, really sharply, but then a complete reversal until we ended the day with a bullish bar. We sometimes call this plunge protection, whatever you want to call it, stop hunt. I've also read that it was about a change in the odds on Brexit actually being occurring, but either way it doesn't really matter. What we saw is that change in sentiment. This is why over the last week or more we've been saying trade intraday, get in and out of the markets, reduce your risk, because obviously any longer term trades can be completely wiped out by that type of move. We saw this type of move last week on the pound. So trade extremely cautiously if you're trading at all today. I think there'll be a lot of traders sitting out of the markets today, having been caught out by this move yesterday, trying to understand what's going on. I think we're going to have to retain the stance we've got at the moment going into next week, which is one of, yes, take opportunities, but make sure they're quick in and out intraday opportunities, simply because of the volatility that's going to be caused by Brexit. If we go over to gold, I know this is quite a crunched chart, but the reason for that is so you can see the high over here. This was a key level. I've got that level marked at 1304. We saw the breakout. We saw the risk-off move inverse to the S&P, exactly as we'd expect. But then we saw price come all the way back down as dollar strength died off, as the S&P pulled back long. So clearly, again, that change of sentiment halfway through the day. Over on crude, this is really the only trade we had yesterday. We took a trade on the low of yesterday's bar. Clearly, we'd had a big move up, but the sentiment was downwards. We took profits, or certain partial profits, at the $46 level. We're now looking for a break and retest of this market before the next level we're looking at is around 43s or 42, something in that area. That's where we see crude oil going. This is a market that we will have our eye on today, as I say, for that break and retest to 46 to take that short. One other market I'm going to show you, we've been long cocoa, certainly from really this point here. The first entry we called on cocoa was this bar here. We've been long since. We've been looking for other opportunities to get in. I think we only had one other opportunity about this level that actually triggered us in, but look at that for a big bar that came back and came through basically down two really significant levels. What must be 2 weeks of long days or a long trend there. Our stop at this time was around this level, so we got taken out there. We made money. Having said that, we really should have, or I certainly should have, I recognised a rising wedge at this point here yesterday morning. I considered taking profits off the table, even though my initial target was these previous highs here. I have to admit I made a mistake there. I hadn't spotted this downward trend line here. Had I seen that, I would have taken half my profits and not proceed or not wait to potentially take those there. So that hurts a little bit, but this is now going to be a very difficult market to get back into until it takes out those highs. We were in the market because cocoa is seasonally strong in June. We're not at the end of June, but I would suggest that that's the seasonality's coming to an end. So we'll sat out of this market until such a time that new highs are made. Okay, so that's it for today. Usual info about this being our Phoenix View Pure analysis. Some details about how we actually trade, what we analyse, and how we hopefully would be in a position to help you move your trading forward. If you've got any questions, visit the website phoenixblue.co.uk or email us directly. Okay, guys, so that's the end of this week. A big week to look forward to next week, all about Brexit. Can't actually say that I've really got any idea what's going to happen, but between now and then we need to trade safely, conserve our capital, so that once we've got through this period, hopefully we'll have some really nice proper direction again in the markets, and we can start making pips and pounds. Okay, guys, have a good weekend, and we'll speak to you on Monday. Take care. Bye.